Because now 70% of the people are in the money economy now.
President Museveni traces Uganda's economic journey through 5 stages, from post-1986 recovery after years of collapse, rebuilding the productive base destroyed during the Idi Amin era, to diversification beyond subsistence agriculture, value addition of raw materials, and now the emergence of knowledge-based industries, including automotive assembly and ICT.
From the colonial times, at independence, the figure they gave me were 9% in the money economy. Now, when we came, still a small number of the people were in the money economy. The majority were outside the money economy.
He notes that the economy has sustained average growth of about 7%, with projections of double-digit expansion as oil production, industrial manufacturing, and regional trade deepen.
The money economy, investing in profitable ventures, having money for yourself. We are looking at a farmer maybe in the village who you have given a 1 million per PDM, that fund of PDM that they receive the 1 million. Ideally, the reason for giving them that 1 million is getting them into the money economy so that they can, you get involved in business and try to grow that money.
Government's economic empowerment programs like NADS, Entandikwa, youth livelihood programs, women entrepreneurship programs, Emyoga, and the parish development model have helped expand the money economy participation from 32% in 2013 to over 60% by 2019. This means that more households now earn incomes, use mobile money or banks, and buy goods and services, rather than relying solely on barter or subsistence production. But economists caution that being in the money economy is not just about earning cash.
Now, in my estimate and view, I think that, for example, at the parish level, we could do some programming so that we know that there are so many people in the parish and they need food, and they need housing, and they need clothing. Is there a way we can program the parish so that everyone in the parish is accounted for in terms of employment, in terms of work, in terms of production, in terms of access to the goods and services that are being produced? So I think leaving it saying to the market, I think, in my opinion, is outdated.
Without strong productivity and market access, cash participation risks remaining low value, high effort survival work rather than wealth creation. This is where rural Uganda becomes a decisive frontier. While most empowerment programs target rural areas, production remains fragmented. Inputs are inconsistent, aggregation is weak, and value addition is limited. Unless rural households are connected to reliable markets, processing facilities, storage, and financing, government's economic empowerment programs risk delivering short-term relief rather than long-term transformation.
So the government must be also clear on identifying the needs of specific households, specific regions. Is there need cash? The need might not be cash. The need might be a road, a bridge that somebody is not able maybe to transport their milk over the bridge. Otherwise, the cash might be redundant.
For Uganda to reach bigger heights in asset and wealth creation, experts argue that the next phase must focus on turning villages into production units, not just beneficiaries, linking farmers to regional and continental value chains, scaling agro-industry, mineral processing and manufacturing, and convincing the population to join the money markets.
Africa is 18% global population, but we are only 2.2% global GDP. So that means that there is a disconnect. And to me, that's the opportunity I see. If we focused on business and emphasized how do we become part of the global economy. And to me, we shouldn't be looking at government. These are things that I think now capital markets should feel in terms of this infrastructure. Imagine if Ugandans had raised money for Bujagali. Now imagine the wealth that we have created for Ugandans.
The 70% milestone signals real progress, but the final test lies ahead, whether Uganda can convert participation into productivity, income into assets, and national growth into continental relevance. Wadulo Arnold Mark for UBC.